car driving is down. People are logging less miles
Oh, interesting.
on their daily drives. Less people are commuting and all of that. But frequencies are up.
Huh. Wait,
So
people are driving, they're spending less hours on the road?
Yep.
But the frequencies of what, accidents?
Yep.
Oh, well.
And you could attribute that to distracted driving.
Yeah. Cell phones,
Any number of things. So that's kind of a weird one that you're like, doesn't quite make sense, but has a direct impact with all of these insurance companies trying to deal with
interesting
claims and being profitable.
Welcome to the podcast dedicated to real estate, insurance, and everything in between. Join us as we take you along our own brokerage building journeys with additional wisdom from our network of business experts. Welcome to Bricks and Risk. Hey everyone, welcome to another episode of Bricks and Risk. I'm Tim Garrity.
And I'm Sean Mooney.
And today, Sean, I'm going to introduce this one. We're going to talk about the insurance industry woes, as I like to call it.
Put the people to sleep today.
Hey, I think people are really going to get into this one, myself included. We recently just did an episode where we were talking about the residential real estate industry and everything with the National Association of Realtors and lawsuits and commissions and the whole thing. But we also wanted to talk about insurance as well. One, that's your industry, Mooney Insurance Brokers. And two, I want to kind of start this off as like a consumer.
Yeah.
Because I feel like if we're comparing it to real estate, consumers may not understand it as much because you only buy and sell real estate like every so often. But in insurance, we all have it. And most of us pay insurance monthly, if not even more often than that. Just depends.
Yeah.
So what I have been feeling is that insurance, the industry as a whole, seems to be in a little bit of a tough spot. And also, like, my monthly bill has been going up. And, you know, you would call it like a premium, however you want to do it. So why don't you talk a little bit about what's going on in the insurance industry today, and why are there people just like me who have insurance on their home or their car and the bill has gone up?
So right now it is the worst market that I've seen in over 20 years.
Wow. And when you got in 2002?
Yeah.
Okay.
Yeah, right around there. But not like this is the worst by like a little bit.
Yep.
This is the worst by like a lot.
It's like the worst year.
Yeah.
Wow.
Yeah. And some people talk about like a generation or 100 years that they're...
Was there a time prior to you getting in that people said like this was a really hard time in insurance as well?
Yeah, certainly.
It's all cyclical.
Correct. And so what we normally see in the insurance marketplace is hard market and soft market. And it will go ebb and flow.
Yeah, peaks and valleys.
Right. And so hard markets is typically what we're in right now. And, you know, that means that companies aren't making what they normally make for a variety of reasons. And then a soft market is everybody's making money. Everybody wants to write more.
Yeah.
Go get more, sell more.
Bigger appetites, higher profits.
Yep. And so what we're experiencing right now is the most dramatic that we've seen in quite a while.
Wow. And
so we talk about premiums. Premiums is like one part of this, and there's more to it. But the real driver in this is really due to inflation.
Okay. Explain that a little bit. So again, we've all heard the term inflation the last like 3 years.
Yep.
Like everyone's heard this, your grocery bills, your gas bill, now your insurance bill, real estate. Like why is inflation really causing some of these problems?
And I think it's, so if you're like, you pull up to the gas pump and you're like, man, this is like $1 more than I paid last year.
Yep.
You don't really understand why, all of the reasons behind why, but you understand that like, all right, there's an inflation part of this that is driving the cost, right? And so insurance right now, due to inflation, is premiums on a normal year, what we see on increases, what we would typically see would be modest increases year over year.
Like a couple percentage points type
4%,
of thing? Okay.
5%. What we're seeing right now is the basement being 20%.
Wow. Really?
Yeah.
Meaning everyone's a minimum. Most people's insurance bills monthly have gone up somewhere around like 20%.
Yep.
Whoa.
Yep. And
I don't think I thought it was that bad. That's crazy.
And that's on the low end, right?
Wow.
So like if your premiums went up, let's just say 15%, you're like way ahead.
Damn.
Yeah.
So you would be more like 15% if like you haven't had any claims type of thing.
Yeah, but there's more to it than that. It's just some companies are more profitable than others right now, so they don't need to take as much.
They're almost like you happen to be with a good company and you're a good client type of thing.
Yeah, somewhat, but more to it. But then on the far end is like 50% increases that we're seeing. I had a guy call the other day and he called and said, hey, he's not with us. Mm-hmm. And he said, hey, can you take a look over my stuff? I got my renewal and I was like, fell out of my chair. And I'm like, okay, what's going on? He said, my insurance for my auto policy went up 100% from last year, no claims, and no accidents, no claims, clean history, no violations, no nothing. 100%.
Gosh.
I said, there's no way.
Yeah,
I was trying to call.
Have you seen that before? Is that
not that number? Not that number. So he was literally paying $4,000 last year. I said, send it over.
Yeah.
I got to see this. I got to get my eyes on it. Not lying. Sent it over last year. Sent it over this year at the renewal. $8,000.
Oh, wow. All right. So here's a question. The bills are going up mostly because of inflation. It's because the insurance companies, they're not making enough money. Would you say that's like one of the reasons why?
So it is about making money, but it's like, how do you get there?
Yep.
Right. So like really insurance, if you think of insurance just as a program, right? So your insurance you pay the insurance premiums to the company.
Yep.
The company pays out for claims, and then whatever is left is how profitable you are.
Exactly.
Right. And so if you're at a 100% on your loss ratio, combined loss ratio, that means like you took in $100, you paid out $100, nobody's making money.
Made nothing.
Right. Normally running around 94, 95% after all the claims are paid, all the expenses are paid, you're doing pretty good. Right? You're not doing great, but if you get down into that 90%, you're doing really good. Right? When we see these numbers come through for quarters, we see the summary sheets for like last year for claims paid. A lot of the carriers that we write with, a lot of the carriers that are national brands, 115, 120.
They're all losing.
130.
They're losing 15 to 30%. They're paying out 15 to 30% more. They're not making any money at all.
Right.
They're just paying money out.
Right.
I'm assuming they all have like reserves and stuff like that.
All kinds of other things. I mean, if you look at the underwriting loss for State Farm, which is the biggest insurance company in the country, they had, I think, Dylan, check me on this, like $14 billion underwriting loss last year.
Whoa. All right. So again, insurance can be a little bit harder to talk to. You know, real estate's a little bit sexier, like, let's be honest. But insurance is really a part of everyone's lives. I mean, health insurance, car insurance, home insurance, life insurance, like there's insurance in all sorts of different ways, and you do certain things.
14.1.
Thanks, Dill. Also, my next question is like, one thing I noticed personally is like, I feel like with natural disasters, it feels like based on me, we're almost 45 years old. You're about to be 45. I'm a couple months younger than you, a month younger. Is that natural disasters seem a little bit more intense now than they were, let's say, when we were like 10 years old. Again, this might just be perception as reality, meaning it's like the media, like news, social media, like you hear things all over the world, any country, any island, like we can learn anything we want anywhere in the world right now. We couldn't do that when we were 10 years old.
Yeah.
So with that being the case, would you say, does that play into this at all?
Yeah, 100%. I think because they're building more, there's more infrastructure, there's more everything than like 40 or 50 years.
Bigger population.
Just as a result of that, there's more quote unquote stuff to damage, right? So if you had 50...
Wow, that's an interesting way to look at it. Yeah.
50 years ago, there was less houses to damage, less,
right,
roads or turnpikes or hotels, or
there's more to fix.
Yeah. So when a natural disaster, catastrophic in nature, comes through, it does do more damage.
So it's almost like, if you're in a wildfire area, they've built more residential homes. Sometimes the most expensive homes in areas, they're on the sides of mountains. They're on the tops of mountains, of peaks, all these areas. So you get a sick view, which is awesome. That's what people want in real estate. But from a wildfire standpoint, that may want to be one of the riskiest places you can live, because sometimes it's where they happen.
Yeah.
They don't really happen in the town below. They happen up in the mountains or something like that. Something sparks or whatever. It's dry.
Yeah. And so those types of events are definitely putting pressure on these insurance companies. It's harder to be profitable when you're dealing with all of these storms. But there's a lot of other factors in play that you wouldn't even think about. And like one being, car driving is down. People are logging less miles.
Oh, interesting.
On their daily drives. Less people are commuting and all of that. But frequencies are up.
Huh. Wait, so people are driving, they're spending less hours on the road?
Yep.
But the frequencies of what, accidents?
Yep.
Oh, well.
And you could attribute that to distracted driving.
Yeah. Cell phones, any number of things. So that's kind of a weird one that you're like, doesn't quite make sense, but has a direct impact with all these insurance companies trying to deal with interesting
claims and being profitable. The other one too is the number of claims that are now going to litigation, which is up around 20 to 30%.
Meaning you put in a claim when something happens.
Yep.
They say you're not covered.
No. What it means is you get in an accident.
Yep. And
then the cars get fixed, everything. And then after that, you're suing that other driver.
So it's like the liability from, I hurt my neck, I hurt my back, I hurt my neck and my back.
Yep. Doctor says I need a backiotomy.
Doctor says I need a backiotomy.
So those things, that's another one that is putting that pressure on these insurance companies.
Okay.
So
it's just the people arguing with each other, people going for money grabs, whatever it is.
Fill in the blank. It's just more money being paid on claims because
it's more litigious.
Yeah.
Interesting.
So that's another factor. And then if you think about autos and homes, the cost of repair overall, right?
Yeah.
So to fix, we had up in New Hope, we had a house fire that I think we were insuring the house for like $750.
Okay.
Kitchen fire. It wasn't like a total loss or anything like that, but it was pretty extensive interior damage.
Yeah, smoke damage and all sorts of stuff.
They paid out like close to $900,000.
Whoa.
For the repair.
Why?
Cost of labor, contractors' rates, materials.
Whoa.
Materials are up 30, 40%.
Yep.
Lumber, roofing, siding, windows. I mean, appliances.
It's just not mathing at that point.
Right. And so what these insurance companies are kind of left to deal with is like, last year you were paying $1,000 and your home was terribly underinsured because the rate of inflation went up so quickly and so sharply that they weren't getting the right premium for you last year. And then a claim happens, we're obligated to pay, whatever today's rate is for labor and materials. And so they weren't getting the right rate last year on that. And now what they're trying to do is play catch up.
Yeah. Now they're like, we got screwed last year, so now we're going to have to ding you this year kind of thing.
Right.
Wow.
And so they have to, when they do a filing, they have to go to the state. State Department of Insurance has to approve it. So they might go to the state and say, hey, listen, we had this many losses. We're this much under being profitable.
Mm-hmm.
We need a homeowner's rate of 32% across the board to get us right.
Whoa.
They're not, more times than not, they're not going to approve their number because you have to show all of the math. Or,
sure, yeah.
You know, it's not just, that's what a lot of people think is like, a lot of people just think, oh, they're just taking rate. They just want more money, you know, this
right.
and the other. But really, there's a process for all of these insurance companies that they, you know, have to petition the state and file their rate to the state for approval. Then the state has to sign off to say, okay, you
like,
came
is
to
this
us.
going to hurt consumers? Is this fair to you, fair to them? They're trying to find middle ground.
Right. So 32% will give you 27.
Gotcha.
You know what I mean? So that's kind of how it works. And so now, but once that takes forever to get the approval, now you have to cycle that rate through your book of business, and that can take up to a year.
Wow.
To kind of like get that higher premium back.
Yeah.
So you can see kind of where this went and how we got to this spot just by all of these factors. It really was a perfect storm of like all of these things happening at once.
Yep.
And all of these things happening like so quickly.
Hey everyone, this is Tim, your favorite Bricks and Risk co-host. But don't tell Sean. I hope you're enjoying this episode, and I'll get right back to it in a moment. Our audience grows through word of mouth, so if you would please take a moment of your time and give us a review on the platform you're on, that would be fantastic. Please also help spread the B&R word by sharing your favorite episode with a friend. We greatly appreciate your time and trust. Now, back to the show.
All right, here's another question. So on top of that, another question that I have, and I'm sure other consumers have this question as well, is like some people are actually being denied coverage for their home, for their car. And we've talked about this on a previous episode when you were explaining like drones, carriers were like outsourcing to drone companies who were like taking footage of like an entire town or region or whatever. And then there's like years of data. They're using that data to like judge people on their homes. Or like, your home's falling apart.
Yeah.
I don't want to cover you anymore. Talk about that. So like when people are being like denied coverage today, like how is like why is that happening? What's the main reason? And like, how's a company like yours, like helping or dealing with that?
Yeah. So if you think about it, like in a hard market like this is that we're going through, insurance companies are trying to take measures to avoid a claim happening.
Yep. Being proactive instead of reactive.
Yep. And so what they're trying to do is say like, all right, if we write this account, if we're going to provide coverage for this home, we want to make sure that we're not going to insure it and then, quickly thereafter having a claim. So in a hard market, these companies are being very selective on who they want to write and trying to write coverage on a property that isn't going to have a claim, or at least do their very best to rule out any possibility of that. And kind of what that is what we see now is like sidewalks and steps, right? So tripping hazards. So when we write new coverage, they're going to go out and inspect. And they say, oh, there's a sidewalk that's sitting up. That's a trip hazard. So that could be a potential for a claim.
Yep.
So homeowner, you need to take care of that, right? So they're trying to take
I'm sorry to interrupt. Are they reaching out to homeowners and saying like, take care of this?
Yeah. So on a couple different levels. So if you write a new account, every house is getting inspected.
Got it.
So new
They
business.
take a look at everything they're about to insure if you're new.
Yep. Renewal business,
Mm-hmm.
they're also doing the same.
Really?
Yep. So you've been with the company for 3 years. They're going to go out, do an inspection, and if they like what they see, you're good. But they might also find they don't like the roof.
Do they tell you that they're doing inspection or?
Yeah, they would.
Okay.
Yeah.
So they're still, in that instance, they'll probably send like a human being to go do it, or is that still more looking at like data?
Yeah. So it depends on the carrier, depends on the situation.
Okay.
They're all different.
Some do and some don't.
Yeah. So there's always a cost associated with doing it.
Yeah, you send a human being and it costs more than like just looking at data that already exists.
Yep. So if you're able, so let's just say, and there's, they can pull permit information, right? So they know when 123 Main Street had a permit pulled on their roof.
Wow.
So then it goes through an algorithm.
Wow, they're really digging.
Yeah. I mean, just think about the amount of data that's available.
You can pull up anything. This is also similar in real estate. Like, we do development, so we flip homes. Sometimes I have a client that's an investor. They're buying a home to fix up. Like, you got to check, like, if it's in the city, you check with L&I, licenses and inspections, to see, like, does this have any violations against it? Because it's, like, not in good condition.
Yeah.
So it's almost like in that vein, you're checking things out before you make the decision.
So the best way I could put it is when these companies do decide that they're going to write new business, they're going to cherry pick what they want, right? So it might be a roof, it might be old windows, cracked windows, sidewalks, any variety of things that could pop up that could potentially be a hazard that they want to try to avoid if they're offering that new coverage.
All right. So now that we know more about that and why that's happening, so you've worked for the big box insurance companies.
Yep.
You've worked for State Farm and Allstate.
Yep.
That's how you cut your teeth. Then you started Mooney Insurance Brokers. It's an independent brokerage, so you have multiple carriers.
Yep.
How are you faring in this market? Are you having just as much trouble as the State Farms of the world, like 14 billion? I mean, obviously it's a beast of a company, but like, is that having as much of an effect on your company, or are you able to kind of pivot, adapt, talk to different people, look at different carriers to help out the consumer?
Yeah. So the best way to put it is, because we are a broker, we have options. Whereas another agency might not have the same.
They might have one or two.
One
option.
And so we have,
Crazy.
So the direct impact to us is, number one, we are getting calls to our brokerage where people are saying, hey, I'm getting non-renewed from my company. Can you help?
Right. They don't want me anymore. Can you insure me?
Yep. And then because we have, a number of carriers, we can kind of take what situation they're dealing with. Maybe it's they had too many car accidents, right? Now their carrier is like, get out of here. We don't want you anymore. Or they had a claim.
You mean like me?
I'm not going to name any names.
Had a couple car
Tim
accidents.
Garrity, but that does happen.
Just for the record, my insurance company still insures me, even though I had a couple of fender benders.
I had to call in some favors over the years, but yes, you are insured.
Hey, it's good. It's good to know. It's good to know people in different industries, right? This is relationships. It's all relationships.
Absolutely. It's not what you know, who you know.
So you know.
So we're getting a lot of calls where people are saying, hey, now they're scrambling, right? So they just got a letter in the mail. Hey, we're turning off your coverage in a month, right? And they're like, oh my God, what do I do? You know? And so we have the flexibility, the options available where we can look at them with a number of carriers and kind of take them and find the right match.
Yeah, so you can almost take it, like at your brokerage, I'm imagining, do you put it in one spot and it's going out to everyone kind of thing? Or do you have to individually go to each carrier and be like, what do you think? What do you think? What do you think? Like, yeah, so what's the model at an independent brokerage?
So we have the ability to take it in and fire it out to 15 companies.
Gotcha. So it's just like one and done. Let me know what everyone thinks. I'm sure some people ghost you.
Yeah.
And some people are like, here's where we're at. We feel good. Some people are like, nah, you're going to get all different vibes. But that's cool because you technically have 15 opportunities to help someone who only had one opportunity before, and they unfortunately said no.
We've also seen it on the other end too, not just like, hey, I've been with this insurance company and now they're cutting me off. We've also seen it where like they say, hey, I just signed up for new coverage with this company. They went out and did an inspection and now they're blowing me out in like 30 days.
So they said, we'll insure you.
Yep.
Pay your first bill.
Yep.
Then we're coming out.
Yep.
The answer's no.
Yeah.
Whoa. That's insane.
Yeah.
Is that just across the board? All companies are doing stuff like that, or some of the larger companies, like where, I mean, not to like pinpoint anyone, obviously.
Every company's doing it a little differently. Some are just uber aggressive on, some companies will let stuff slide. Some companies will say, hey, are you planning on getting this fixed in the next like 6 months?
They're like being very particular about quality.
Yeah.
It's like if they don't meet a certain threshold, if they're not super low risk, they're just like, we're just going to pass for now.
Yeah. It's like, why would you?
Yeah.
So there's one carrier that we...
Awful, but it makes sense.
Yeah, it does. One carrier we write with, literally, and I don't think this has ever happened in the history of time. Dylan, maybe you can check this.
Check the history of time for us.
There's one carrier, it's a Big 10 insurance company out there that does personal lines. Literally said, pens down, nobody's writing any new business.
Just said, no, we are not writing anything new anywhere.
Yep.
Stop.
Done.
Whoa. How long ago was that?
6 months ago.
Damn.
Not writing.
Has anyone filed suit?
No, because how could they?
Yeah, I mean,
so they're renewing. They're not.
Yeah.
They're renewing.
They're just saying we don't want any new clients.
Right.
We don't need any new clients.
Well, what they're saying is we're losing so much money.
We don't even want to look.
If we add more in, we're just going to be writing more and losing
perpetuating
more.
The problem.
Yeah.
Wow.
There's another company that we wrote with, $500 million book of business for their personal lines.
Mm-hmm.
Just done. They are literally just non-renewing their whole entire book of business.
Are they going out of business?
No.
They're just like, we just need to hit the pause button.
No, not pause button. They do other stuff like commercial insurance.
Okay.
They do life insurance.
Gotcha.
But their personal insurance, home auto, $500 million.
We're out of that game.
Literally, normally what would happen would be you put it out to market and someone would buy that, another carrier would buy that book of business.
I want that. Yeah.
No takers.
Whoa.
So they're like, instead of continuing to take losses on this portion of our business model, we're just going to unwind it and shut it down over the course of the next 2 years.
Oh my gosh. All right. So, here's another question. Are there any changes currently that we haven't talked about in place today that like weren't in place, let's say like 2 years ago or so when a lot of the inflation scares were really happening?
I mean, just kind of what we went over. I mean, the normal stuff that we're seeing with the inspections and stuff like that, that's kind of what's been implemented to kind of blunt, all of the losses that these companies are taking right now.
Okay.
I'm sure, like literally we get these reports that come through like daily or weekly. Like at first it was like, hey, we won't write a home with a roof that's older than 20 years. So you could have a 30-year shingle and it be like, 25 years. You got 5 years up. They don't want it.
What's the craziest story you have heard, aside from that person that had the 100% jump in their car insurance? Have you heard are there like any crazy stories that come to mind of like people's homes that like you just heard it and you were like, what?
No, I mean, not like...
Nothing that comes to mind that's that severe?
Not like a premium standpoint or anything like that. I mean, we get a lot of these, you're getting canceled for what?
Yeah.
Like a head turner or a head scratcher. Like, is that real? Is that possible? Could they actually do that? Like right now, one of the things they've instituted is no homeowners where a tree is near your house.
What?
Yeah.
Whoa.
So just like they're
They just
doing,
don't want that risk because they're like, it could destroy a $500,000 million home.
yeah,
Just don't want to have anything to do with that.
yeah.
It's that much of a risk.
So a carrier literally
Yeah.
is taking that off of their books. They're basically saying it's too much of a risk. There's too much there that it's better for us to not even try to write that.
Well, all right. So here's a great question. I'm going to relate this to our little local market here. So we're in Philadelphia right now. We're in the Manayunk section.
215 Labs.
215 Labs. And Sean and I live in the suburbs, the inner suburban ring. We live like 25 minutes from here. You live in Ambler. I'm in Flourtown. When we bought our house in Flourtown like 3 years ago, so we bought it. We had to put a lot of work into it. We moved in like June of like 2021. That's when we moved in.
Yep.
So we'll be there 3 years this year. That summer, if you remember, and I know you remember because it's happened in your neighborhood, there was like a crazy ass tornado.
Yep.
In our area.
Yeah.
And if you've never been to Pennsylvania, or you're not from here, like this isn't tornado country. It's very hilly, like, it's just we don't have the terrain for it. And there was this crazy tornado that came through. It went through your neighborhood.
My neighborhood.
And literally just like destroyed. Like, there'd be like a community of like 50 townhomes or something like that. And like 90% of them were like destroyed.
Yeah, it was 200 was the townhouse community across the street.
That was what it was?
Yeah.
So
and
like
90%. Yep.
Did you go, so as a consumer, because it went right through your neighborhood, did you have the same problems that are happening today then with the tornado, or is it just way, way worse today? Like, is there anything from that scenario that went down for you personally, be like, hey, like a tree fell on my house, like I need some help?
Not that we're seeing now.
Okay.
I mean, that one was just,
It's like, how many tornadoes have we seen in our lives? Like, not many.
how many earthquakes? Oh.
Yeah, that was today.
Today.
We didn't even talk about this.
No.
Up in like Jersey, like New York, there was like a 4.8 earthquake. I was at a coffee meeting this morning, and it was like, we were all sitting in there. We were in Flourtown, and then it was like, and literally like everyone was like looking around like, what the hell is that? Like it wasn't so severe that we thought this is an earthquake country either.
Actually, I knew it right when it was happening.
Really?
Not right. Like, so,
Your spidey senses were like,
no. So, I thought at first it was a truck because our windows rattle sometimes when we're on that street if a big truck comes by. But after that first, like after a second or two, I knew it was an earthquake.
That was like something.
Because in my old office, if you remember 2017, Delaware had one.
Yes.
That we felt.
I remember that.
It was the same.
I was in Center City.
Yep.
And they evacuated all the buildings.
It was the same. I knew, I was like, boom. I was like, I knew that it was the earthquake because I knew right then it was the same effect.
Yeah, I had that same feel.
Yeah.
Whoa.
Yeah.
Oh, that's crazy.
So in all of this, I think it's important for people to understand because honestly, I'm dealing with this day in and day out. I mean, I get 3 calls, I get 6 calls, I get any number of inquiries, from existing clients and new clients. What do I do? How do I do this? And we're trying to help people navigate this because it's so brutally bad on so many different levels. And we're doing as best we can to try to help people and position people in the best way possible because it is difficult. And what people don't understand is like, you're looking at your bill right now and it is going up. But if you do switch and they do cancel it out immediately because of whatever reason, then you're in a much worse position.
Oh, wow. To get,
than dealing with that. Now you're scrambling.
Right.
Now nobody wants to touch you. And then it becomes so much harder. So you have to be
been flagged.
Yeah. You have to be very aware of you from 360 degrees when changing insurance.
It's like George Costanza in Seinfeld when he takes the book from the bookstore into the bathroom and he goes number 2 and he comes out to put it back and they're like, "What are you doing, sir?" He's like, "I'm all set." They're like, that book has been flagged. You have to buy that book now. So he bought like $100 plus book on like art history.
Yeah. Very similar.
Very similar?
Yeah.
All right. Well, I got one more question. Okay. And this is probably the best question we're going to get to today. So,
All right.
so you chose to buy a Droid instead of an iPhone.
Yeah.
And this was years ago. Okay.
What year was that?
You got to tell me. Why do you still continue to live with that choice today? This was my favorite question.
This is a question?
This is an actual question.
It's a very professional
You're on
podcast.
the hot seat. You're going to have to answer it.
I didn't want to get a new charger. Thank you, everyone.
We're going to leave it at that. So, all right. Thanks, everyone, for tuning in again to another episode of Bricks and Risk. See you soon. Thank you for joining us on another episode of Bricks and Risk. Our goal is that you walk away with 1 or 2 valuable nuggets, and we greatly appreciate you sharing your time with us today. You can find all B&R episodes on Spotify, Apple Music, YouTube, and anywhere else you get your podcast content. Until next time, keep learning and keep growing.